How much are you eyeballing the Fed and its timing on rates?
Well, you want to watch the Fed. It's clearly been a very significant headwind in the last year as they were aggressively raising rates. We think that if they're almost done, and we believe they're almost done, that's going to be a bullish sign for stocks. We think inflation has broken. It's going to allow the Fed to stop raising rates, whether it's one or two more. And then at that point, we think the stock market looks at the economy and the longer-term outlook, and we think that's pretty favorable.
You know, a little bird, and by that I mean my producer, Evan Falk, who's in my ear, told me that you whispered to him right before the interview that you own Meta. Obviously, Meta is kind of like right now, until tonight, the stock story of the day, down from its highs. Obviously, nice pop this morning. What's the bull case on Meta, David?
So yesterday's call really was a much better call. Zuckerberg finally started to focus on the cost side. They cut out about $5+ billion in the next year. They started to talk about Reels doing better and monetizing Reels better. He also started to focus on artificial intelligence as a product rather than talking about the metaverse, which is a 5 to 10-year investment. They're starting to talk about bringing it to the bottom line much earlier. So people thought Zuckerberg had lost his way, was just spending like a drunken sailor. He seems to be doing a little better. If that's the case, the stock is very inexpensive and has good long-term upside. We think the investments they're making make sense, but they're finally controlling it with a little bit cost along the way.
Yeah, I almost feel like you've offended drunken sailors, David, with that. Who knows? So we'll see. You seem to like sort of out of favor, beaten up stocks. It's kind of one of your themes, and PayPal would fall into that. Another name you own that, you know, listen, drunken sailors would have made fun of PayPal's performance last year, David.
And well, they should have. The stock is down from 300, so it was down about 70%. They did get an activist involved, and management also started to focus on the cost side. We think they have a good long-term product, good market share, and they're finally running the business with costs in mind, profitability in mind. We think from the $80 level, the stock probably has about 30 to 50% upside, and we think 2023 is going to be a good year for them. As we look at this year, we think a lot of last year's biggest losers that are down to reasonable valuations, and PayPal is down to about 17 times earnings, are going to do really well. We think that a lot of leaders last year are not going to do as well this year, so you want to look through some of the wreckage, good long-term businesses, but that were thrown out last year.
I think if somebody asked me, and nobody would ever ask me this, but if they did, and they said, what's the biggest company you never talk about? Like in terms of market cap, but just we never talk to the CEO, we never talk about the company. It's got to be Amgen, would be my, if I had to answer one, I would say it's Amgen. They're gigantic, one of the biggest biotechs in the world. We never hardly talk about them. Again, maybe that's a reason you like them. What's the bull case on Amgen ownership?
Well, the bull case is that they've done really well. They have a very, very diversified portfolio. They're growing their earnings in low double digits, yet the stock sells at about 14 times earnings, pays a 3.5% yield. They had earnings yesterday or the day before. The market was a little bit lukewarm on them, but this is what they've done the last few quarters. They announce earnings, the stock sells off. If you buy the stock on that dip, generally it's done a lot better in the following 3 months and has an upward trend. We think this is a very good buying opportunity, entry opportunity for Amgen. It's a good long-term business. They're very shareholder-oriented, attractive price.